Don't second guess that your Bitcoin is safe. Get a security audit through a one-on-one session with me and join the school community, the Bitcoin Masters, to meet other Bitcoiners, grow your network, and grow your net worth. The third one here that is getting the most sort of backlash and people talking about it is this new third option of selling BTC. They can buy USD and they can buy debt. So what's interesting about this is they've done this in the past. I think it was in 2022, I believe, where they sold some Bitcoin that was at a high cost basis. And basically that gave them a tax loss, which they could use to be better tax efficient with the other profits of the business. So in the US, the way you can treat Bitcoin is either just by default, first in, first out, which means when you sell Bitcoin, the accountant is going to charge you capital gains based on your oldest purchase of Bitcoin. So it's the first one out in and the last sale out. So that's really not going to be tax efficient because Bitcoin goes up and to the right in the long term. The other way you can do this is by specific ID. So every single chunk of Bitcoin you buy has a price that you bought it at, a day you bought it at, and if you sold that specific chunk of Bitcoin, it's going to have the ability to be accounted for based on its individual cost basis. So the fact that MSTR has been buying Bitcoin every single day, they've been announcing it every week or almost every single day, means that they bought Bitcoin much above the current US dollar exchange rate of $80,000. A lot of people saying, okay, well, that's not ideal. And yeah, it's not the most ideal situation. I mean, the most ideal situation for MSTR is that they're constantly buying at a low and Bitcoin is going way, way up and they're at these massive profits and they sell a little bit and it's a really good trade. But it doesn't mean that everything's lost if the price goes down and they have under cost basis Bitcoin, because what that allows them to do is there is some advantage to selling that, taking a profit loss, taking a capital gains loss, which can go against their tax obligation, and then using the money that the US dollars that they have now from selling the Bitcoin to do whatever they want with, to fund the obligation of STRC, for instance. And what's interesting about being able to fund the dividend of STRC is they've done this by selling MSTR stock. And if MSTR stock was to trade at a equal MNAV to the Bitcoin on its balance sheet, then that's essentially the same thing as selling Bitcoin if the metric that you care about is Bitcoin per share. So yes, they've only sold Bitcoin, I believe, one other time, but they've effectively been selling Bitcoin exposure every time they sell more MSTR stock. And sometimes it's more or less efficient to do that. So the idea of selling Bitcoin, there can be this tax advantage reason to do so because it allows them to have write-off for the capital loss. There can also be times when the MSTR common stock is not trading well above the value of the Bitcoin holdings. And in fact, it's trading at a discount. And therefore, if they sold it, it would be even less accretive in a Bitcoin per share metric than just selling Bitcoin itself, especially with the ability to do some tax loss harvesting. So here we actually have some metrics that they have for the cost basis tier. They have Bitcoin, they have it all here. They have an unrealized gain of 3.7 billion on this chunk of Bitcoin here, a $7.5 billion unrealized gain on this. They have a $7.6 billion unrealized loss on all of this Bitcoin in the holdings right here. So that's quite a lot. So if they sold this, there would be a tax benefit of 2.2 billion. So it would offset a portion of the loss here. So again, this isn't the most ideal scenario. The best scenario would be seeing a realized gain. Yes, there would be tax implications to that, but they're still seeing a gain, right? So this tax benefit is to offset some of it and to make the loss not as bad.